What if this crypto crash is not what everyone thinks it is? Right now, Bitcoin has fallen from $125,000 down into the $70,000 range. We've just printed 4 red monthly candles in a row, and we may be heading into a fifth. For many investors, that word is starting to come back into the conversation: bear market. And some analysts are now quietly warning that Bitcoin could even revisit $40,000 before this is over. But here's the strange part. At the exact same time prices are falling, the fundamentals of crypto are stronger than they have ever been. There is clearer regulation, new leadership at the SEC and CFTC, more institutional access, better infrastructure, and more adoption worldwide than in any previous cycle. So why does this feel like 2018 again? To understand this, we have to look at the technical picture first. Historically, when Bitcoin drops below the 50-week moving average, it signals the start of a longer correction phase. And in every major cycle before, 2018, 2020, and 2023, Bitcoin eventually drifted down toward the 200-week moving average before starting the next big rally. That level today sits around $58,000, and if this cycle follows the same pattern as the past, Bitcoin could slowly grind lower over the next 6 to 8 months, possibly even stretching into late 2026 before a true bottom forms. That's the technical side. But the real reason for this drop is not just charts, it's liquidity. And that's where the Federal Reserve comes into the picture. A major narrative right now is around Kevin Warsh, a leading candidate for the next Fed chair. Warsh has said something that made markets very nervous. He believes the Federal Reserve's balance sheet is trillions of dollars too large and needs to be reduced. Why does this matter for crypto? Because when the Fed's balance sheet expands, money flows into assets like stocks, crypto, gold, and real estate. More liquidity means higher asset prices. But when the Fed shrinks its balance sheet and pulls money out of the system, asset prices struggle. That's exactly what investors are reacting to. But that's only part of the story. Tom Lee pointed out something very important. He said the crypto industry already deleveraged months ago. There isn't a lot of speculative leverage left to wash out. At the same time, gold and silver went on a massive rally at the start of the year, creating fear of missing out and pulling investor money away from risk assets like crypto. So crypto didn't fall because it was fundamentally weak. Crypto fell because capital rotated somewhere else. Then Raoul Pal added another layer to this. He says the narrative that Warsh is extremely hawkish is actually wrong. According to Raoul, Warsh follows the old Greenspan playbook. Cut rates, let the economy run hot, and allow liquidity to flow through the banking system instead of through Fed asset purchases. In simple terms, liquidity may come back, just in a different way than people expect. Stanley Druckenmiller has also suggested that Warsh is open-minded and unlikely to block policies that stimulate economic growth. So now the market is stuck between two stories. One story says liquidity is disappearing and asset prices must fall. The other story says liquidity is coming back through a different channel, and this correction is temporary. And when markets are confused, prices drop. That's exactly where crypto is today. Technically, this looks like a classic Bitcoin bear market phase that could last several more months and potentially push prices toward $58,000 or even $40,000. But fundamentally, this may be one of the strongest environments crypto has ever had during a correction. That's why some investors are not panicking. Instead, they are placing buy orders lower, preparing for quick dips and temporary wicks if they happen. Because if history repeats, the biggest opportunities come when fear is highest and the narratives are the most confusing. So the real question is not, is crypto crashing? The real question is this the final shakeout before liquidity returns in a new form? If you found this breakdown helpful and you want clear, simple explanations like this about Bitcoin, crypto, the Fed, and where the market may be heading next, make sure you subscribe to the channel, turn on notifications, and share this video with someone who owns crypto. We have a lot more deep dives like this coming, including upcoming interviews and analysis that you don't want to miss.